Matt Orton, Chief Market Strategist at Raymond James Investment, is with us. Matt, thank you so much for joining in. Oh, that's a lovely looking tree behind you, looking very, very festive.
Thank you.
Are you getting set to wind down the year, or are you going to work through to Christmas? And if yes, are you buying any more stocks here in India?
Hey, good morning, Serbia. Unfortunately, this year doesn't really give you opportunities to turn things down too much. There's plenty of catalysts that are still left to come between now and the holidays. And then if the markets may have a Santa Claus rally, certainly don't want to miss out on participating or making sure that positioning is properly squared. I still remain quite optimistic on India. I remain optimistic globally on markets. And outside of the US, again, I think India has the chance to outperform the rest of the emerging market complex, or at least certainly exceed its performance this year. With respect to new names, I'm not looking at adding any new names right now into the portfolio, but I am thinking about where to tweak or adjust weights. So especially given some of the underperformance names like a Swiggy, which is one of the newer names, I think their capital structure and their access to capital is going to help them compete and be a number 2 player in quick commerce. That's a name I'm thinking about adding some weight to if we can get a nice, strong momentum behind it. And also thinking about making sure weights to some of my winners this year, like Mahindra, HDFC Bank, Adani Ports, how I want to have that structured into next year, where I do think all of those names can continue to perform well.
Hi, thanks very much for joining us, and Merry Christmas in case we don't speak with you, before and between now and Christmas, really. So just a quick word, if I can. I mean, President Zelensky essentially finally indicating that he's ready to forego NATO ambitions, this should do it, right? I mean, this was the crux of the entire thing, and if they say that we'll never ever join NATO, and sign, I mean, if he's ready to do that, then I mean, there should be a path to peace.
Yeah, Prashant, it's a good point. There should be a path to peace. Now I think Zelensky is putting the ball squarely back in Putin's court to see if he's actually serious about where we go. And I still don't think Putin is that serious about actually trying to have peace. He's kept a wartime economy going, and I think as a result of that, unless Putin gets all the territorial concessions that he wants, I don't think he's willing to give up anything in this negotiation. As Trump has also highlighted, both parties have to leave unhappy in some respects if you're going to have a good negotiation. So I'll be curious to see where this goes moving forward. But one of my key themes in my outlook for 2026 is continuing to play offense with defense. Whether or not this war gets resolved or there's another détente put in place, the need for different regions around the world, Asia Pacific, Europe, North America, the amount of investment that's going to be made into smart missiles, smart defense going forward, I think that's a huge opportunity for investors going forward. And that's an area I still want to make sure that my portfolios are well positioned for leading into 2026, because I think that's a very durable, long-term growth theme.
All right. Hi, Matt. Good morning. Good to see you, Ben. And I'll tell you what, I don't think we are speaking for sure in 2025, because I'm off to the races next week itself. That said, I'm hoping, Interglobe, or Indigo as we commonly call it, gets its act together, on a customer front, because I'll be flying out, going for my holidays with my kids. But that's a stock that you have liked in the past. It's pulled back 20%. They seem to be trying to get the house in order now. What's the view? Do you think it's providing an entry opportunity? That's a very lean and mean machine, as we've been talking about. Your take?
Absolutely, Nigel. Interglobe is definitely a lean operation. I think that's why it's going through some of the challenges that it has right now. There are risks to buying this dip, though. I've had significant gains in the name, so it's okay to still keep a position. My weight has been reduced given the events that have taken place, but I wouldn't be a dip buyer right now until we know how regulation might shake out. If there are any sort of regulatory changes that are made with respect to Interglobe, I think that could be challenging for the margin picture of the company going forward. So I would wait to see a little bit more clarity in the name. And if the operating environment remains remains just as it is today, I think then the dip becomes viable. But I'm okay waiting to buy that dip. And instead, I might actually look into areas like IT services that I have not liked for all of 2025. But you're starting to see some green shoots, especially names like TCS is interesting to me. I'm looking at it. Going back to Serbi's first question, while I haven't added it to a portfolio, I think there's reasons to believe that you could see margin improvement, both through M&A activity and through their focus on implementation with new technologies. So that's one to keep on your radar if you are looking for a discounted name in 2026.
Okay, all right. So that's one more name, more ideas there from Matt. Matt, thank you so much. And just in case we don't speak now, up until Christmas and New Year's, wish you happy holidays and a very happy festive season. Thank you so much for joining us today.
Thank you.